Good morning, traders, and welcome to the live stream. My name is Charles. I come from a community called Piratetraders, where we are focused on the ES, the NQ, and how they move through the two-way auction process. Well, Charles, what is a two-way auction process? Well, it is simply a way to take the market's information and organize it so that it gives us an edge in our trading. Okay? If you can recognize momentum and momentum coming to an end, right? If you can recognize when the market is moving in a certain direction on whatever time frame you operate on, whether you're a scalper that trades, over the next 5 minutes, or you're a day trader that trades over the next 5 hours, or you're a swing trader that trades over the next 5 days. If you can understand what the auction process is doing on your time frame, you have an edge. Because you will recognize where one auction is coming to an end. Say the market is going down, you'll be able to figure out where it's going to stop going down and turn around and start doing the next thing. Okay? That's the auction process. That is the edge that we use in our trading. So how do we have that edge? Well, one trick is we look at a time frame above the time frame that we are operating on, and then that gives us a clue of what might happen on our time frame. So if I operate on the 5-minute time frame, if I'm in and out of trades super quick, I want to know what's going to happen over the next few hours, right? That's going to help me make decisions about what to do in my trades that are 5 minutes long over the next few hours. If I take trades over a few hours, I want to know what's going to happen over the next day. If I take trades over a day time frame, I want to know what's going to happen over the next week, and so on and so forth. So I like to start on Monday morning with what Jim Dalton calls the top-down approach, where we start looking at longer time frames to try to give us an insight as to what to expect on a lower time frame. So let's start by zooming out really quickly. We're just going to take a look at the monthly and the weekly candles. They're all going to look very similar right now because of the momentum in the market. So on a monthly time frame, the market is trending lower. That is bearish to see. It doesn't mean the market has to keep going lower all month long. It doesn't mean we have to continue lower next month. It just means as of now, we are trending lower on the monthly time frame. Okay. So what we're asking ourselves is, on the monthly time frame, where might we find support? Now, the most obvious one are these previous all-time highs around 47.50. Okay. That's where on a monthly time frame, the market could find support and turn around and start heading higher. So that's just straight up bearish to see. Let's look at the weekly time frame. All right, so here we get a little more insight than the monthly. We saw the market spend a couple weeks balancing, going sideways, but we broke out of that balance last week and had a massive move to the downside. So what stands out to us when we look at the weekly time frame? Well, for one thing, it looks like the overnight last night came in to test those areas where we might expect support on the weekly time frame. Okay. Secondly, we can see this market is getting itself overly short, overly fast. Okay. Meaning that people are getting short in the hole. What does that basically mean? It means there are new people getting short down here near the lows. And that's fine as long as the market keeps going lower. But what if the market were to bounce and reverse and start going higher this week? Well, then you've got a lot of shorts to squeeze. A lot of people who are short in the hole that will get squeezed if the market were to turn around and start going higher today, rather than continuing the momentum lower that we've had over the last few weeks. Okay, great. Let's zoom in and we'll take a look at the daily. Well, again, on the daily, what are we getting? A very clear sign that this market is getting itself overextended to the downside. The market does not drop straight down forever. It just doesn't. It's not how markets work. It needs to balance off the momentum we've created over the last 3 days with all of this selling to the downside. There's two ways the market can balance off this excess to the downside. It can go sideways with price, sideways with time, or it can reverse with price. It can come back up with price. So for example, this is balancing with price, coming back up, looking for the resistance. This is balancing with price. If you're looking at it over a longer time frame, this whole thing, when we were looking at the weekly time frame, was balanced with time. Okay. So on the daily time frame, we either need to spend a day going sideways at lower prices or reversing back up with price in order to end the momentum down. Okay. So now let's zoom in and we'll look at the market profile chart and we'll see if we can get some more nuanced understandings. So first and foremost, should we have been long into the weekend? Absolutely not. We had a spike down at the end of the day on Friday, a gap down, followed by a gap and go. Let me zoom out here. So we had a gap down on Friday morning, followed by a gap and go. Market immediately selling lower down towards the overnight low. Getting to the overnight low brought in new selling, which continued the momentum lower right into the close. So when the market closed on Friday, there's no reason for anyone to be looking to go long over the weekend because it's already telling us the highest probability is that we are going to open lower, that we're going to open either at yesterday's low or lower come Monday morning. Okay. So what's happening now? Another massive gap down day. Now, those of you that were watching my live stream on Friday, you know I was thinking we needed to balance on Friday. I was thinking we had this big gap to the downside. We had a very large gap the next day, and that many much unfinished business, that many unfilled gaps will lead to at least a sideways day. Well, we did not get a sideways day, did we? We got to the overnight low and we got new selling, and then the market continued lower. So I am basically coming at it today exactly the same way I came at it on Friday, which is I recognize that bigger picture, the market is trending lower. The momentum is to the downside. All right. This market is looking for a massive correction, and we're probably not done with that yet. However, probabilities tell me the market isn't going to just go straight down every day forever. It is going to need to balance things off. So going into this morning, my first assumption is we need to balance, right? But if I get signals from the market, like we got on Friday when we got new selling at the overnight low, if I start to get signals today that we do still have momentum to the downside, I will get short with that momentum very quickly. So, okay, Charles, I hear you. You think we need a balance day. You think we need a day where we go sideways or we turn around and go higher, but you're ready to get short if we don't. What do we look for intraday once that opening bell rings? Well, the gap will tell the tale. So anytime you have a gap, the first order business for the market is always to try to fill that gap. Essentially, just think about, let's say we were to open right where we are right now, 49.75, right? For the market to get from 49.75 in the overnight over the weekend, for the market to get from 49.79 all the way down to 48.33, there had to be a lot of people shorting. There had to be a lot of sellers in this market in the overnight to get it to go back down. Now, some of them have probably already been squeezed, right? Because we were able to completely retrace back up to sort of the middle of the overnight range. So you got, maybe half of those traders gave up, but there's still a lot of shorts from the overnight in the market right now. There's a lot of them because we closed up here and we're opening down here. There's still a lot of shorts from the weekend in the market. And so once that opening bell rings, those shorts have to decide what they're going to do. Are they going to stay short or are they going to lock in profits? Well, they'll lock in losses if they got short down here. But if they got short anywhere up here, do they want to lock in the profits or do they want to start to take a loss? So once that opening bell rings, you better believe those traders are watching the market like a hawk as the market is passing up and down through that opening price. And they're trying to figure out what's going to happen. People are always more likely to do business out of fear than they are out of greed. It is a more powerful thing. So people are more likely to cover their shorts if it doesn't open and start immediately selling off right away. They're more likely to cover their shorts. That is why there is a higher probability that we will at least try to fill the gap. Okay? Because the sellers that got us here are weak hands. They will get out of their shorts very quickly. And if they don't see the market open during regular trading hours and immediately start to sell off, they will start to cover those shorts. Whether they got short up here and they want to lock in their profits, or they got short down here and they're already in so much pain and they see the market start going up and they just can't take it anymore. So the first move should be to the upside. Okay. And by first move, I mean, let's say first, 20 minutes or so, 30 minutes or so of the market, the first move should be to the upside to try to fill that gap. Now, whether or not they fill the gap is a whole different thing. And as a matter of fact, gaps this large often don't fill on the first day. But what I am talking about is an attempt to fill the gap. If we get an attempt to fill the gap, I want to remain neutral. I don't want to be overly bearish this morning because there is a chance if we get, moving to the upside, we could squeeze all these sellers and start to bring in some buyers who are buying the dip, and we could fill the gap and get back to yesterday's range. Now, I don't really know what would get me long for a gap fill trade. I mean, I would have to see something, in the market internals, in the Bookmap, in real time that had me absolutely convinced that this market is going to fill the gap, because otherwise a long makes no sense to me. However, if we fill the gap, seeing what happens at yesterday's range does set me up for a trade. Short if we get resistance, long if we don't, basically. And if the market opens and it does not get that attempt to fill the gap, they don't go up at all, they open and they immediately start to sell off to the downside, I am very, very bearish, because then all these sellers stay in their trades and new regular trading hours shorts join and the market continues the momentum lower. I have a hard time imagining we're going to get to the overnight low today. I know you're like, but Charles, we've had these crazy volatile days where the market's been making these massive moves. Why is it so hard to believe that we could make a, 100 point or 150 point move to the downside during the regular trading hours today? We could do that. Well, I just think the market is short in the hole right now. I just think too many people sold over the weekend out of fear and anxiety. And if the market doesn't give them what they want today, it's not going to go lower because there'll be more shorts to cover and more shorts to cover and more shorts to cover. So if we open and we don't get the gap fill, I will be getting short. I will not be falling in love with those trades. I'll be looking to lock in profits, basically where you see these weak references. These are old weak references from all the way back in February of last year. Okay, these are very old references, but they will still work. So the market may just push down to repair this first week reference, and then that's it. And it turns around and comes back up. So if I'm shorting, I want to lock in profits at 47.29 and then look to re-enter the short on resistance, right? Same thing at 48.99. If I'm in a short, I want to take profits and look to re-enter on resistance. Same thing at 74. If I'm in a short, I want to take profits and look to re-enter at resistance rather than just getting short and saying, hey, let's wait till it gets all the way to the overnight low, because I don't think it'll make it there. I think even if we have a bearish day, it's going to be a slow melt to the downside, okay, to grind our way to that overnight low, which means when there's a slow melt, there's always chances to take profits, re-enter, take profits, re-enter. Okay. So all in all, I am feeling bearish, but I am also recognizing that in terms of statistical probabilities, there is a chance we get a bounce today. And so I'm waiting and watching for that. And I will say by the end of the first half an hour, certainly by the end of the first hour, we should have a pretty good idea of whether or not we are retracing this overnight selling or we're getting new selling in the regular trading hours. If you have not yet, please smash the like button. Those thumbs up really help out the channel. Bookmap was kind enough to put this together for you. You can be kind enough to push one little button. One little smash. We got 86 people hanging out, but only 15 likes. So that means roughly 75% of you hate me. And I just don't know what I did. I don't know what I did to deserve so much hatred from the chat. Good morning to Rich TT02. Sheena in the house. Trevor is here. Good morning to you. Jay. Good morning, pirates and traders. Thank God it's Monday and the casino is open. The chips are on sale. Why do the casinos do those sales? SC in the house. Good morning to you. Nap is here. Welcome, welcome. Passive income. Good morning to you. Good to see you. Kiwi is here. Welcome, welcome. Also, I'm going live in the Discord right now. So if you are watching from the Discord, if you want to ask me any questions, or say hello, just jump into the Futures-Charles tab and I'll communicate with you there. We got Does Man. Good morning to you and welcome. Trader is here. Good to see you. And they both said good morning to each other. So very polite in the Discord today. People are very, very polite. Let's see if the live stream chat could keep up. Heart medicine in the house. Always good to have. John Q says discounted drinks are like prop firms running 90% off. Yeah, the joke I always make with that is like, name one legitimate business on earth that does 90% off every month. Like every 2 weeks, a new 90% off discount. Can you imagine if Apple started selling iPhones at 90% off? Holy moly. Jay says, push that like button early and often. I don't mind if you're late to the like, but I do want you to smash that like button. Ba-da-bow, ba-da-bow. Smash the like. All right, well, no questions coming in from the chat, and we still have like another 12 minutes until the market opens. So let's zoom out. We'll take a look at some other assets and just kind of hang out, waiting for that opening bell. So why don't we just zoom in real quick and we will take a look at the last time it looks like we had this kind of big moves in the market. This was 2020, February of 20. Remember what that was? COVID. So you can see the initial sell-off started with a gap and go. 4 days of selling to the downside, although not necessarily all large days. This was basically a balancing day, pretty much almost entirely inside the previous day's range. But then what happened? The market went sideways at lower prices before continuing lower. Okay. From there, 3 days of selling, balance. 2 days of selling, balance. Slow melt lower. 3 days of momentum up, balance. Two days of momentum up, balancing day. So you see how this works? This is like the most extreme scenario we've got, COVID right here. And the longest we went with straight momentum down was these 5 days here, right at the beginning. But again, this really was sort of a balancing day. So that's why I say it is not normal to have these 3 gap down days back to back, one after another, and all of them getting new selling. This is a very extreme move to the downside. And that is why I feel the market, like as of the open in 10 minutes, has gotten itself too far too fast. Not that it can't keep going. Not that we can't head, way lower with the market. We absolutely can. But just that this is too big of a drop too fast. So 3 days of consistent hardcore selling is likely to lead to a balance day sooner or later. Now, I'm not saying it has to be today. So if we get a gap and go this morning, I'm short and I'm going with the flow. But I'm just saying I feel like we're due for a day of sideways or a reversal to fill the gap. All right, let's take a look at the NQ. Same story. I mean, identical. Same story on the NQ. Let's take a look at gold. Okay. So somebody last week was asking me, I believe it was on this day here. Yeah, it was on the third day after the gap up. They were saying, should I go long or short gold? And my thought was, I don't know how much further it can go up. The market has momentum, but it's definitely coming back for this gap, is what I said. It will definitely come back. Well, now it not only came back to fill the gap, it rotated back down to the opposite end of the balance area. So my guess on gold right now is that it is back in this previous balance area and that it will likely balance inside of there. So that's going to look like, let me actually draw it on TradingView. So Zakin leaves it there. There we go. So that's your balance area on gold right now. Okay, so the highs are going to be around 3,064. The lows are going to be around just 3,000, the round number. And so as long as gold stays inside this range, it is likely to keep going sideways like it did in here. If it gets up to the high and it can't break higher, it'll come back down to the low. Okay? So if it turns around, if this morning it tries to get back up above that high and it can't, assume it's coming back down towards 3,000. If it breaks out of balance to the upside, that is extremely bullish to see. Okay? Because that is balance, breakout, back test, and then second breakout, which should lead to a much bigger move in gold. So yeah, I would say if I was trading gold right now, I would wait for us to get above 3,064 and then look for new buying up there. If you get new buying up there, you can look for a move back to all-time highs. If it fails, you can look for a move back down to 3,000. On the shiny metal, let's take a look at oil. This is obviously a market that is being artificially suppressed right now. Yeah, I wouldn't day trade oil. There's nothing in there that seems like an edge to me. But if I was a longer term investor, this would be a buy. Between here and like 57. But they just broke through some major resistance. Or I'm sorry, major support. So the next question is, does that start to become resistance? Which could lead to a larger pullback. In the liquid gold, let's take a look at the VIX. Oh, it's up 48. But that's to be expected. Okay, Microsoft. This is looking bearish. So there's kind of two ways you could look at this. You could draw a trend line like this and look at the break of that trend line. It's been bearish. You could also look at it like these are previous highs that should now act as support. So when the market comes down to where it's going to open. It's where it's at pre-market right now. Yeah. So 350 for Microsoft, that's where you start looking for a bounce. So Microsoft, ironically, in the exact same position as the ES and the NQ this morning, which is it has gotten itself overly short, overly fast, and right into previous support. So the question becomes, does support step in? If we get an attempt to fill the gap this morning, then we could reverse the momentum to the upside. If we don't, then, you're looking to head down towards 325 or 326 on Microsoft. So there's a lot riding on the gap this morning. Does the market open and new sellers step in and start pushing this market lower? That would be very bearish because it's going to squeeze more longs. It's going to get more people to exit their stock positions, which is going to cause more selling. Or do we start to fill the gap this morning? Do we start to go up and then you get short covering? You get the people that got short over the weekend suddenly having to cover those shorts and the market goes up instead of down. This is really important what happens in the first hour today. And the good news is we're hanging out together so we can watch what happens and we can talk about it. I can give you my opinion. You can give me yours. You can smash the like button. I can say thank you. 4 minutes to market open. We got a question here from JS. He says, Charles, do you look at SPY? The short answer is no, not really. On a rare occasion, a very rare occasion, I may buy a SPY call or put as a swing trade. But no, I don't really look at it. Because I trade the ES and the MES and futures on the MES. Options on the MES. Because I'm trading the ES, I just watch the ES. And there are those that will argue there are insights that can be picked up by looking at the SPY. I'm not trying to say they're wrong. I'm just saying for me, all the information I need to execute my trades is on the screen in front of you right now. It is what is happening in terms of price. Where is the market going on the price axis, right? How much time is it spending there once it gets there? How much volume is it bringing in there once it gets there? And then what's happening with the liquidity? Is whatever the information the liquidity in Bookmap is showing me, is it supporting what I'm seeing in price action, or is it contradictive? Does it not make any sense? If it's the same, if it's, in line, well, then I'm in my trades, baby. And I'm 100%. Let's go. Stepping on the gas. And if they're contradictory, I'm more cautious. Less likely to enter a trade, more likely to trade with slightly smaller size. Just coming with more caution. That's all I need, right? And the more I look at, the more confusing it gets, the harder it gets to read the market. So I keep it simple because I'm stupid. And that's the best thing to do, is keep it simple. 2 minutes to market open. We got a bot trying to stop it from dipping. Beep boop, must hold market till open. Beep boop. Tim says 90% sale 24/7 every carpet store in town. Okay, that's fair. That's fair. Mr. Ree in the house, good morning to you. Ismail says, looking for some SPY QQQ option plays, like put debit spreads. I expect a bounce back and continued downside follow through. Depends, what the dates are, what your expiration dates are on that. I agree with you, bigger picture, that we need some kind of a bounce, and that getting a bounce, even a gap fill to yesterday's lows, does not imply a reversal. Bigger picture, we could get yesterday's lows and then get smacked right down again. So yeah, it depends what your date is, but keep in mind, there is a chance this momentum that we've had, we had on Thursday and Friday of last week, we may still have it, which was gap down, gap and go to the overnight low, new selling into the end of the day. Gap down, gap and go to the overnight low, new selling into the end of the day. There's no reason we can't have another day like that today. So let's just wait till the market opens. Let's see what happens in those first few minutes, which will hopefully help guide us. If they look like they did on these days, on Thursday and Friday, we don't want to be looking for a bounce. We want to be, man, I got my speakers turned up way too loud. We don't want to be looking for a bounce if we're going to get a continuation of this momentum. We want to join the party. The market is open. Let's see what happens. So right now I am obsessed with the opening price, which is basically 43, 49, 42, 49, 43. That is the opening price. And then the base of these single prints up, 49.22. That's our first potential support. So what happens at our first potential support? Does the market hold it or not? If not, we have no buyers. We still have momentum down. If we get a bounce, can we come back through the opening price? If we can, all right, well, then we got some gap and chop. We have potential to go sideways for a little bit here. Certainly support at 22 wouldn't be bullish by any means, but it would just be a chance for the market to try to fill the gap. So let's see what happens. Okay, so we got that support, not quite at 22, but we got that support. And now we're looking at the opening price and we're asking ourselves what happens there. Does the market run out of steam and come right back down again, or can it cross through the opening price? Running out of steam and coming back down is bearish. Crossing through is neutral. And so you say to me, Charles, if you're not entering trades right now, why does it matter where the market finds support, whether it crossed through this level? Because right now I'm trying to understand, do we still have this momentum? Is the market going to do another day like Thursday and Friday today, or are we going to try to fill the gap? What happens at the opening price here will tell us which of those two is happening. So I got to pay close attention. So far, we have more new selling. That is bearish to see. All right. All right, you guys ready to watch my computer have a heart attack? I'm having it now combine the last 500 days of data. We are into February of last year. Okay, so that's the second time we've gotten a bounce and not been able to get through the opening price. So this is now bearish to see. It increases the odds we're heading down to 48.99. That might be all the market needs. That's our first set of weak references that need to be repaired. So it may just poke below there and then come back up. But for now, it's looking bearish. Kiwi says, let's take a look at Bitcoin. We will. We will definitely look at Bitcoin in a few minutes. Let's just feel out how we handle this weak reference at 4,900 first. Willie T, good morning to you. Pavel is here. DNK says the current administration are also not normal. He's talking about comparing the massive sell-off. Yes, I do believe that Trump over the weekend saying he doesn't care what happens to the stock market is probably the first time a president has said that. I'm not sure people liked this. I was thinking to myself, what if you ran like an endowment? What if you're in charge of like Harvard's endowment or Yale's endowment or something like that? You got like $2 trillion of capital and it's in the market. And then you hear the president say, I don't care about the market. You know, it's like, what do you do? Maybe you run to cash because you're like, I don't like the sound of that. Willie T in the house. Pavel is here. Percy, good morning to you. Sheena says, Charles, how do I join your Discord? Well, you join the Discord by joining the brigade. If you look at the top of the stream, you'll see there is a thing that says piratetraders.io/join. You head there You join the brigade. It's $20 to sign up, and then you get access to the Discord. But really, the Discord isn't the cool part. These live streams are. The fact that I do these live streams every single morning. I send out an email giving my insights of what I think is going to happen that day. What are the levels of interest where I think, one might take profits if they were in a trade. And then I live stream for the first hour to walk through what's happening and explain these things step by step. So, I mean, yes, you also get access to the Discord, but it's really about them live streams. It's really about your time with Papa Charlie. That's weird. I should not have called myself that. I instantly regret that. Let's not make that a thing. John Q in the house. Nap says the VIX is at 50. Dun-dun-dun, dun-dun-dun-dun. Dun-dun-dun, dun-dun-dun. Dun-dun-dun, dun-dun-dun. Gin and tonic in the house. Good to see you. Sook is here. Good morning. Heart Medicine says Trump is a wild card. Market doesn't like uncertainty. Yes, sir. The only thing more scary to the market than the idea of tariffs is idea of tariffs that they don't know when they're going to get put on, when they're going to get taken off, how much it's going to be, whether there's any logic behind it. It's the uncertainty that makes things so hard in the world of business right now. Okay, so we repaired those first week references. This is the question. Is that enough to reverse the market? Is this enough selling for the sellers to start taking profits and the buyers to step in? If it is, we should be able to reverse back up through the opening price. If not, the next support, and it looks like it is not. So the next support is 48.69. We will look for a bounce there. Oh, there's panic. So much panic. People are shitting themselves in their pants. Oh, the panic. So much panic. Okay, so we're now watching the halfback, 49.17 for resistance and continuation lower. If we're able to poke through the halfback, we would then watch 49.30 for resistance. But honestly, if this market is going to continue lower here, it should hold 49.17. Oh, the panic. The fear and doubt, it's all about. John Q says Black Monday. I don't know if it's going to be that bad, my dude. But it feels like it. Danny G in the house. Good morning to you. Vu, good morning to you. Jay says $20 is the best deal on the street. Great education and singing too. Well, now you guys know the singing is good. So there's just no one's even questioning that in the chat at all. No one is thinking I was going to sign up for the brigade, but then I heard him sing and I thought, never mind. Frito, nice try. That's not a thing. We're not letting that be a thing. Arjit in the house. Good morning to you. Rando is here. Okay. I'll stop. No, Thomas. No. David. Good morning to you. Guillermo. Good morning to you. We got a question in the Discord. from Doesman. He says, considering the fear in the market, would regular stats for reaching overnight levels still apply, or would it still be valid only if the market continues the trend? Would the regular stats of reaching overnight levels still apply? Yes. So no matter what's happening with the market, whether it has momentum or not, momentum can go up or down. This is momentum down, right? Gap down, gap and go, new selling, ending at the lows we've had the last few days. That's a sign of momentum down. And you can have momentum that is volatile like this, and you can have momentum that is slow melt, that is tight ranges. No matter what the conditions of the market, the levels that we watch are always the same. And there's a reason for that, because that's how we know when something unusual is happening, right? If you always watch an overnight high or an overnight low to see what is happening when we get there, you see it on trend days. You see it on balancing days. You see it on reversal days. You see it on highly volatile days. You see it on low volatility days. When you watch those same things every day, you begin to say, wait a second, today isn't doing what it normally does. That's how I knew to get bearish so quickly in the morning this morning, right? Because no matter what type of day it is, all right, so this is our next potential support here, and pretty much the last chance for a bounce. Otherwise, we may be heading for that overnight low. So right here at 48.69, looking for a bounce. The market opened. We had a weak reference down here that needed to be repaired. So I don't care what kind of day it is, trend day, bounce day, whatever. It doesn't matter. If the market opens, it starts moving in the direction of the trend, of the gap. Okay. It gets to the first week reference. Doesn't matter what that week reference is. Doesn't matter when it's from. It doesn't matter. It gets to that first week reference. It repairs it. If that doesn't reverse you back up through the opening price, it means you're heading to the next week reference. It doesn't matter the conditions of the market. Every time, always, that's how I read markets. So today, that let me know I should be bearish from here for a move down to repair these weak references, right? So it doesn't matter what kind of day you're getting. You look at the same information the same way every day. That's your edge on the days where it's being crazy. That's your edge, is recognizing the crazy and knowing what to expect next. I told you I'd stop singing. I didn't promise I'd stop whistling. Okay. Good morning to Zach L. Ibuprofen. He says the big line right now is 4,900 there. Do you think that's a stop loss for a bigger seller? 4,900 being a stop loss for a bigger seller? No, I don't see any evidence of that at all. So the way that I look at markets is I'm asking myself a question. From the moment the opening bell rings, the question I'm asking myself is, who's in charge of the market? Who's getting what they want? Because at any given moment, there are people going long and there are people going short, but only one of them is going to get what they want. If I'm going long at a level and you're going short at a level and it goes down, you get what you want and I don't get what I want. Right. And so when you can recognize that, who's in charge right now? Is it the buyers or the sellers? You can always assume it will keep going in the direction of whoever is in charge and until they run out of steam, until they can't push it anymore. So right now, I'm not asking myself the question like, where are big orders of stops, right? Or anything like that. Oh my God, I have ducks walking around in my yard. ducks with little shiny green heads. That's so funny. If I wasn't streaming right now, I'd take a video for my wife. Anyway, so the question becomes, who's in charge? The gap down at the beginning of the day told us the sellers were in charge. The fact that they repaired the first week reference and didn't reverse meant they were still in charge, and we were coming down to that next support. So now that we've gotten to the next support, the question I'm asking myself is, are the sellers still in charge, or have things reversed? Well, it's happening as I speak. I was looking at this area right here for resistance around 49, between 49.05 and 49.17. We did not get resistance there. Looks like you did take out one seller for 158 contracts. So I don't know if that's the size you were talking about. But they took that guy out. But now the fact that this resistance isn't holding, what does that increase the odds of? That we're going to pass back through the opening price. What does passing back through the opening price increase the odds of? An attempt to take the market higher. Because now anyone that's been short so far today gets squeezed. So right now, this support at 48.69 is holding. So the question is, can they get through the open? And what happens once they do? And when the market is more volatile like this, I have to remind myself not to let the fact that a move might be 20 or 30 or 40 points out of nowhere be a reason to change my analysis. My analysis is the same. A gap and go is a sign of sellers being in charge. I need to see a sign the gap and go is over, which in this case would be buying above the opening price. So even if the market makes a 50-point move before it does it, I still look at the market the same way. And keeping that clarity, that's the edge. Okay, so we got some potential resistance just above the opening price, around 49.55. If that instantly smacks the market down, we remain bearish. If not, we look to test resistance up here around 49, we'll call it 72. If that resistance smacks us down, we're bearish. If not, if the market is able to work through both of those resistance levels, we're back to neutral. Okay? Okay, so that was the cross through the opening price. So this is the moment of truth. Do the sellers start to get squeezed here? Do we start to get short covering? Pop, pop, pop. Market popping higher. Boom, boom, boom. There's the first one. Pop. There's the next one. Pop, pop. So that tells us the move up to where we are right now is shorts covering, not new buying. Now we're getting to where sellers might step in. Do they come in and smack the market down? Or do buyers step in? Because so far, the only buyers are shorts, exiting their shorts. Okay, they're poking through the first resistance. That is less bearish, still not bullish, just less bearish. We've still got resistance up around 75. Yeah, exactly at 75. Man, these bracket bots that are normally in the market, you know, that are just always kind of sitting above and below price, they are having a hard time today. They're way further from price as normal, and they keep dropping off the map. They keep popping in and out, whereas normally they're there the whole time. So whatever computer is doing that is running at full speed this morning, trying to keep up with these changes in the order flow. Okay, so we're pushing into that resistance around 49.75. This is the moment of truth for the buyers. If they are going to stay in control of this market and try to fill this gap, from this point on, they want to stay above the opening price. Okay? So sellers come in and try to smack the market down. If they get it back through the opening price, it's going lower. If they smack it down and it holds above that opening price, we are on a path to try to fill the gap. What's it going to be, market? What's it going to be? Can the buyers take control? All right, buyers winning the tug of war. This is now bullish. Man, that was crazy. That was crazy, y'all. Okay, so that's it. That's the low. Right there. Might end up being the low of the day. Doesn't necessarily have to be. We're still in the first half an hour, but they just tried to take the market lower and they couldn't do it. So what does that mean now? They're going to turn around and try to take the market higher. Right? By taking the market lower, first thing this morning, they were getting more business to be had. What was that business? Well, squeezing longs, squeezing people that were hoping the market would reverse this morning and they get out, getting new sellers short, even more shorts in the hole, and then they reverse right back up and out. So now they've got all this liquidity to squeeze on the way back up. So we got resistance above at 5,010, again around 5,020, and then around, 5,039. So basically each 10 points, we have some resistance to get to what we'll call the overnight high, which we'll just say is this area around 40. And then we'll look for new buying up there. If that keeps going, then we look for the gap fill. If we kind of look above that area and fail and pull back down, then the lows are still in play. But as of now, there is a chance. We just made the low of the day, and now we're going to head up for a gap fill. And we're just watching momentum. This is all just based on momentum. Who's in charge? The sellers just lost control. So now the buyers are in control. Let's see how far they can push it. Okay. So unfortunately, I got to bring this stream to a close, but I do want to give you guys some insights to carry forward. So here's how I see things. I am now bullish for a gap fill at 51.04 as long as we stay above the opening price, which is at 49.42. Okay? As long as we stay above the opening price, there's enough people who shorted over the weekend to get us back to Friday's low. There is enough shorts to squeeze, particularly those that just shorted in the hole below the opening price. You know, we told them to take profits. We said, if you're going to short, take profits at the first week reference. We told them that the market was probably not going to get below the overnight low today. We told them, and they didn't listen. And so now they're short in the hole and they're panicking. And so as long as we stay above that open price, they're going to remain in that panic mode. So we just printed the B period. There's plenty of time left in the day. Make no mistake for this market to completely reverse. But for now, I am bullish as long as we stay above 49.42. Okay. My assumption is the market will slowly work its way back up towards that gap fill. If the market reverses back through the opening price, then take everything I just said and throw it out the window. Okay. But for now, that is what this looks like. This looks like the market wants to squeeze the sellers from the weekend. So I am now looking for support where I was just looking for resistance and we didn't get it, or we got it only for a second. So that's 49.70. And then what is now the halfback, which is just a few points above the opening price. These are your two chances for the buyers to hold. If they can hold the market here, they can keep it going higher. If they break through the opening price, they're going to turn around and take it back to the lows. So that should show you where you can do business and what kind of, business you can do and how you can change your mind if the market generated information changes. I can't map things out any better than this. So I hope you all found it helpful. If you did, please consider signing up for the Pirate Traders Brigade. It's only $10 a month, and you get access to these live streams every single day and my insights. I also have a workshop coming up. I only teach a few of these a year, but I teach you how to trade. The entire thing. It is a master course where I teach everything you need to know as if you were brand new to trading to being able to successfully make money and profit consistently. I show you the map of everything you need to know to get from A to B. That is called the Mastery of Markets and Minds Workshop. You can find it by just going to marketsandmind.com. If you head to marketsandmind.com and you scroll down here, you will see that till the end of this month, it's $75 off. So it's normally $450, but it's $375 right now. And you can use promo code Easter to save an extra 20%. So if you go buy it now with the promo code Easter, you can pay $300 for a $450 course. And the cool part is you can change your mind. You have until May 10th to change your mind, and I'll just refund you your money. So if you're considering taking the workshop at all, I recommend signing up now, lock in that cheapest price it'll ever be, and then if you change your mind between now and the day before the course starts, you can get a refund. Okay? With that, I will say goodbye, farewell. If you are not a member of the Pirate Traders Brigade, head on over and watch Bruce's stream. If you are a member of the Pirate Traders Brigade, let's set sail. I'll see you in the private stream in about 2 minutes. Thank you, everyone. Again, bullish above the opening price, bearish below. Happy trading. We'll see you next week. Bye.